This is Justin AMZN on Thursday, April 4th, 2019. This is what we did today. We made a lot more triangles today. First one we were making was right here. That one broke bearish. Oh, there you go. That one broke bearish. The next one we made took a little longer. That one broke bearish. And I guess those are the main ones. I mean, there's kind of a small one right here, like that. That rolled back down bearish. Bullish moves. I mean, I don't really see the triangle here. This is more of a stair step that had a false breakout, came right back into it, and then rallied. Not as much of a triangle. The other thing I am seeing in this is if you draw this larger through this low, and this low, ignoring that, then you can actually connect this, and it's a bigger triangle, but I mean, it's you gotta kind of squint your eyes to see it, right? So let's take these back out. The main thing I wanted to look at today is how we opened up. Oh, here, let me leave this in here for now. So we opened up, we rallied, which was pretty crazy. From this level, right here, opening here, you're opening up right above pre-market resistance. Pulls back into pre-market. I'm going to say support, but there's only a couple of wicks down here. This was much more clear to be resistance because you had some prices up here. Some points maybe, like that one for 112 shares, that one for 100, 200, 184. Anyway, this was really close to the closing price yesterday. So basically flat, flat to open, pulls back, rallies hard, and then just goes sideways. Even looked like it was going to break out, but even up here, it's like we're right into all the selling that we had yesterday. We're not even up to 1830, which was the high yesterday, so we're not even making a new high. And you get these upper wicks, which means you got some selling. The only thing it had going for it is, well, besides this at one point being a very strong bullish candle, was this bullish candle that then the one after it made a slightly higher high before making a bearish candle. So I guess, when I say that it had it going for it, it turned into a bearish candle, so not anymore. But we got a breakdown. High wave candle right on the 21. It's like, okay, maybe that could bounce. But we already got one signal saying, okay, more selling. Second one, that we've got this bearish breakdown happening, or at least a bearish pullback. Doesn't have to be a breakdown. High wave candle, and then we break lower on the very next candle. And you could have been shorting any of this, even right here on this candle going lower, just from moving to 1815. That would have been great. So let's jump over to look at the puts. You could have been getting a put at 915. So the puts I wanted to look at today are the 1815 puts. I know, I kind of jumped around a little bit with different strikes to use. This is our nearest line. It's a nice round number. It's not at 0, 25, 50, 75. It's right at 1815. So let's look at what was going on with the strike, because this triangle basically had an apex at 1815, basically, So if we look at the puts, now if you had bought the high when it was making highs, if you bought a put up there, it would have been really close to yesterday's low on this same put, right around yesterday's high in the stock, around $6, 6, 7, something like that. Well, today we were already below 7 pretty quickly. So obviously you're not going to buy 7 to stop at 6 when it's doing this. But there are plenty of opportunities to buy at 6, knowing that the stock high was not too far away. We're already at that price here, risk and R, to buy at what could be a high on the stock and a low on the option, getting in at 6 by 5. The candle I was talking about was at 9, forgot the time already, 915. Okay, the 915 candle was this one. That candle itself was less than $1 range. Could have been getting into that like 7 by 6, just like this, the moves in here, 7 by 6. And as it moved into 1815, it probably would have been priced around, oops, no, that was the right. So at some point where this candle is the one at 9:30. Already at 9:30, that's this candle, you're getting into 1815. So maybe 11, maybe 12. So from 7 to 11, that's 4R. In 20 minutes, less than 20 minutes. I mean, how cool is that? That would be great to catch that. I didn't catch that. It's all right. It's good to see how this worked with a breakdown like that. It's such a sharp breakdown too. Came down here, started rally into 1815, pushed through it, then pulled back to it. You can tell there are a lot of buyers right in here looking for another bounce. It pulled back a little further. Nice hammer candle in here. Started to bounce. This was actually a nice move here because it made a stair step for 20 minutes right below 1815. Then this candle pushed up through 1815. This, is trapping bears down here. You get the momentum going up. It starts to form a squeeze, pulls back down below 1815, and then it throws these upper wicks right here, right on 1815. This stair step, you get a breakout, but then it gets sold back down. So that's this here. Let me zoom in because I'm pointing here. Okay. This candle here is a whole lot weaker than this candle here. Same area where you're trading up into 1815. This one closes above 1815. This one closes below. This one closes above the stair step. This one closes inside the stair step. They both run into the 21. This one lower, obviously. But then we have another candle with a much stronger wick, upper wick, right here. So these two basically set up what's going to happen next. Either it's got to get above this in a breakout with a close up above these highs, or you close below the lows. Well, it moved below the lows. And I mean, really, you didn't have to wait for a close below because you're trapping so many of the bulls, especially these two candles. So that breaks down, get a bit of a retest and then a rollover. And had you been getting in, let's say you got in on the retest on this candle. So that's 1120 after it broke down from this. So looking at the puts at 1120, 1120 is over here. That's a pullback. Price would have been like 12. So we're in the money at this point. Much harder to trade that with the 1815. So if you had been buying anywhere in here, probably would have been like 12 by 10. And then that would have moved up to 16. So that would have been 2R. Crazy how that would have worked. Let's step out to the 1800 put. And that was at 1120. Yeah, 1120. Okay. So that would have been buying around like 556 by, no, probably 550 by 450 or 575 by 475, something like that. And then that moved up. So 575 up to 775. That would have worked also for 2R. $100 risk moved up to 2R. So either of those would have worked. Little lower amount, premium put in on the further out strike, obviously. But you could still have made 2R on either of those. Let's see, I had this set up like this to look at where the price was the previous day. And then that last one, that was a breakdown here. That was at 2 o'clock. So let's see what you could have done at 2 o'clock. It's right here. Let's see. 2 o'clock with the puts. Yeah, it only went up. I mean, somehow if you were buying at 7, it didn't even move up to 9 for a 2R. So this one would not have played out very well. Even though it had an okay move, it came right back into 1815 and then rallied into the close. And so, or not rallied, sorry, bounced into the close. So you had a really nice couple of S curves here, like this, and then like this. I would have rather been buying here for a bigger move up than buying here underneath 1815. But at this point, I mean, we'd already had this kind of a rally bounce, you know, a rollover here. I'm sure a lot of people were shorting this. And then when it didn't go lower, which it didn't really signal to go lower below this candle, I mean, barely. Maybe there are some people selling here below this candle. But really, I mean, we pretty much held this low and this strong bullish candle. So a stair step like this, I mean, that's a significant volume, significant candle. Even this candle being bearish had the volume. We got a little bit below that one, but because we held the lows here, I mean, it makes sense to get in bullish here as long as you know, we're probably using an option in the money or right at the money so that if it was moving a direction, you had an opportunity to get out quickly. Not have to worry about fill. There would be more people getting in as you're trying to get out. You know, it would make the opportunity to be profitable a little bit easier to get into or to get out of the trade. So some really cool triangles today. I just want to click on this. There we go. Really cool triangles today. Some bounces. You know, you got some bounces here. So we can look at the calls. This was 9:35, really large candle. This one was at 11:45. Again, really large candle. So let's look at 9:35, 11:45, and let's look at like getting in maybe at, let's see what that looks like in the calls. So didn't have any real relationship with yesterday's lows and the calls to be buying in. The price we were closing at was 15. We pulled back into almost 13, 13.50. This is the 18.15 call again. So we're definitely in the money. But you see the clear rollover here. We got a bounce down here, way too wide for a $100 risk. This bounce here, again, way too wide for a $100 risk. But where we started to bounce and do a stair step here, I mean, a breakout 8x7 should have worked to 10. That was at 12. So we're at 12. That would have been this. So this stair step here, this rally, could have made 2R on that, buying calls, even right here. And then the other price, the other time was probably 1 o'clock. So 1 o'clock, you're over here. This could have worked probably 9x8, pretty close to 9x8. And then again, moved up 2R to 11. So there are definitely some opportunities to go either direction. The key things today were looking for these triangles to form. And what I like to do with triangles on Amazon is give it a few more candles. You know, if I think, oh, you know, this is gonna be the rollover, this is it. I mean, this one, it sort of rolled, but then you got some indecision right here. And if you're watching it and you see some indecision here, it's like, oh man, should I move my stop? It's like, no, stick to your rule, you know, do the trade. And in this case, you know, it took, let's see, 11:15, 9:45. So it took like an hour and a half for it to make this triangle. All the while, I mean, it was the only way to really play this was shorting at the high of the triangle up here or buying at the low of the triangle. It's just, it's a little bit harder to know exactly where that's going to be until you have a clear triangle formed. This would have probably been the easier place to short once it did this one, you know, and then did this candle. It's like, oh, if we get back up here, let's short it. But at one point, this was a bullish looking candle. And let's see these highs. Oh, they have the same high. All right, there's a candle in between, which is kind of annoying, but the high is 18.1674, 18.1674. This would have been like a sort of tweezer-ish. If I look at a different, let's see, if I look at a different, let's see, if we look at the 15, we'll come back to the 5. What does that do in the 15? Does that make it a tweezer top? What was it here? Yeah, so on the 15, it's a tweezer top. That's cool. Inside candle and then a breakdown. I mean, that's a nice one. But even this, you would have expected we should roll over more. Wait, what are the lows? Oh, the lows are 5 cents off. That's crazy that it did that today. Tweezer top and then nearly the same lows. And then we did something similar here, right? This one was 21 cents off from the tweezer top, and that one didn't work out. So this one did, this one didn't. And again, just the way the things played out today was more so related to these triangles. And we had better triangles today than yesterday. Yesterday was just a lot more sideways. Sideways at a new high. And then we broke down and started to make some triangles here, or a triangle here, but you had a lot more of them today. And so if you're watching for these, breaking out was actually a harder thing for Amazon to do if it had done it. This candle shows it. Let's say we made a bullish candle here. I mean, we got resistance at 1830 right here. If it's going to move, it's got to do it quickly. It can't just grind higher. I mean, it can. It can do, but we've seen these stronger bounces. Strong bounce, strong bounce, strong bounce. That's been more so the I don't say the pattern, but just what Amazon's been doing. The rhythm, maybe how it's been moving. And then these bearish moves, once you get a good candle in, it's going to continue with a few more. You get this candle here with some higher volume, right? I don't know, that was kind of the same volume. Well, I was thinking that was a higher volume, but maybe not. But you got this bearish candle, another big one, another okay one, and then this really big one here on the sell-off. I mean, those are some of the really good opportunities early in the day. I mean, in the first hour or so to get in and out of something. And so, you got to figure out what time frame you're trading in, what where the stock is at the time, what option strike to do. All that takes more time to get the trade set up. So it's easy to miss stuff, and we'll just keep getting better at where to be to get in the best trades. What I don't think I mentioned is the puts. Had you been buying puts up here, which I said was something you could do and risk it, that would have been buying at 6. Had you held, instead of getting out like 12 or something, or 11, had you held from 6, I mean, look where it got to. It got to 16. You could have flipped that out for 10R. How likely is it that any of us are going to catch the low and catch the high? Nearly impossible. So, have stops in the right place for your risk. Have targets in conservative places where you see something to pause, and people could be stopped out, or that are. Put a target in place where it could start to trap people, or that's where people's stops are. And then if it keeps moving, great. But, it takes something there. So like this one where we had moved through 1815. I mean, 1815 still would have been the price. You could have been getting out at the highs from yesterday, around like 1150. And so these are 12, that would have worked today. So looking back at the price levels from the previous day when we're in the same area, I mean, it's really helping in this case to get some things set up. Now for tomorrow, we did make a slightly lower high from 2 days ago. So this is, let's see, the low here is 1805.12. This one is 1804.20. So a little bit lower. High wave candle at a high. This is a lower high and a lower low from yesterday. Like I said, yesterday's candle was kind of maybe a shot across the bow. Today's definitely is as well, because you have the high wave candle in here, and it could pull back. The other thing to consider is it can actually gap up above both of these and just run, because there's so many bears up here. It just matters to see what happens in the morning. So sideways to down is more likely than it moving up, unless it gets a really strong gap and wants to run. Depending on your risk tolerance, if you can get a setup to trigger in the first 40 minutes to an hour, look for something like this, like a triangle to break out. On other days, we haven't really had something like that. We've had a quick sell-off, some selling and then buying, and some indecision. And sometimes it just takes some time for that to work. But I mean, if you make a trading plan that you're just gonna short the open, buy the open based on other parameters, I mean, if it's in your plan, and it's working great. So definitely some opportunities, more bearish than bullish today. And we'll be back tomorrow with another video. Hope you enjoyed this one. This is Justin AMZN. Thanks.